Are platform companies inflation resistant? CNBC seems to think so. There's an article in CNBC today talking about here's how ultra wealthy are investing going into 2022, right? Now, finally, people are starting to talk about inflation. We've been talking about inflation for over a year on this show. Thank you very much. Not just inflation, but hyperinflation. We've had Jim Rickards on the show back January 21. Go check out that interview talking about what you should be doing with your portfolio. Some of this he talks about, right? Like what this article is saying, real estate, go into, physical assets that have their own mechanism to retain value, right? As opposed to paper and stock. Hard physical assets tend to do very well in hyperinflationary environments. Platform companies with pricing power. Platform companies are those like Amazon, Apple, and Airbnb. They are correct. Those are all platform companies. Good job, CNBC. I think, the statement here that, platform companies are inflation resistant, and is that actually true? It's a very loaded phrase. I think it's misleading. I don't think that statement is true. I don't think any stocks are really inflation resistant, right? When you have high inflation, when you have rising interest rates, it's net a bad thing for equities, for stocks, right? So really no stock is inflation resistant. If you want to put it on a spectrum and say which stocks are more inflation resistant than others, then yes, I think you could make an argument to say that, platform companies in an inflationary environment, which again, if you have an inflationary environment, what you would also expect from that environment is that you'd have slowing growth because inflation is rising, debt is becoming more expensive, which then curtails the growth of the economy. So, rising interest rates, rising inflation should go hand in hand. Growth slows. So what kind of stocks perform well in that environment? And yes, I do think actually relatively platform companies should outperform in that environment. If we look back at the fall in March of 2020, when COVID was first, kind of came onto the global scene here, this was an interview that we did with Kara, the analyst at WisdomTree. WisdomTree and Applico, we worked together to launch this index, and then the ETF called Plat, which puts all the public platform stocks into a basket, right? So if CNBC is saying platforms are inflation resistant, wouldn't totally agree with that. But if you put my slant on what CNBC I think is trying to say, this is interesting, right? So if you look at this chart, this was from an interview that we did with Kara, June 2020, right? So this was fresh, just a few months after COVID. Everything went down in March, right? But Plat went down a little bit less. In this, we're comparing it to the S&P 500, the MSCI index, which is more of like a manufacturing and industrial oriented index. On this scale, S&P and MSCI kind of hidden around $7,000 on this relative scale, right? If everything started out at $10,000, kind of pre-COVID in January, in March, those two went down to about 7,000. The low point for Plat was, maybe around 7,500. Everything went down. Plat went down a little bit less. And then what you see in April, Plat's coming back a little bit more, right? End of March, beginning of April, Plat's a little bit above 8,000. S&P and MSCI are still, a little bit below 8,000. But then going into May and then into June, you really start to see Plat break away, where MSCI and S&P are still sub 10,000, and now Plat's over 11,000, right? So what we saw when COVID hit was that Plat was able to go down a little bit less and bounce back faster. And the reason why, and what we talked about in this interview and others with Kara and other videos that we've had, is that, platforms are more asset light. The things that their customers are consuming don't actually sit on their balance sheet, right? So they have generally a much lighter balance sheet where all that inventory is not there. It's not an asset. It's not a liability. It's from this network of producers that are creating value of some sort that's being consumed on the other side of the platform. So they're asset light, which gives them a certain sense of resiliency. They can also take advantage of the downturn by investing in growth. Since the year or two now, since that crash, you've seen a lot of the mid to large size platform companies reinvest heavily in growth, and that benefit them quite tremendously. So, there's a lot of factors as you look more broadly at the past couple of years and why platforms have done very well with just the shift to digital, needing to interact in a digital environment now. Just because of COVID, you can't, go to the store, or a lot of people weren't going to the store as much as they used to, right? But if you look at just those few months and you see how the market valued the companies, generally these platform companies with strong winner-take-all, winner-take-most dynamics, not the younger single-digit billion platform companies, but generally, if you're a moderately well-capitalized platform business, there is a shift to later stage platforms that are well-capitalized, right? Tens of billions of market cap, if not, towards the hundreds of billions of market cap, right? These companies are going to make it through a crash, a crisis. They can bounce back faster. They have a very resilient asset-light business model, and then they can reinvest in growth and take advantage of the pain that the rest of the economy and incumbents are experiencing. So in that sense, yes, I would say the platform companies are more inflation resistant than other equity classes. Overall, I would say, though, that going into a hyperinflationary environment, you do want to just overall reduce your exposure to equities in general and start to diversify your assets into other asset classes beyond stocks. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.